Warren Buffett said that the stock market capitalization to GDP ratio was the single best measure of stock market valuation. So where is it today? That's what you're about to find out. But before you do, if you could just smash that little like button down there, that would help me out a lot. Think of it as appeasing the YouTube gods so I don't get sacrificed to a pit of fire. So the Warren Buffett indicator compares the size and value of the overall market with the size of the economy. This is done by dividing the Wilshire 5000, basically total market index, by the GDP, or gross domestic product of the US. So where's the market on this chart? It's high, like all-time high. The last time it was this high was back in 2000 during the dot-com bubble, and that was a big crash, and it's higher now. On Buffett's indicator, he once said that once it approaches 200, you're playing with fire, and it's over 200. According to currentmarketvaluation.com, it's sitting at about 228%, or about 88% higher than normal. Even the PE ratio, or price to earnings ratio, is about 80% higher than normal. So we know the market is overvalued. Does that mean it's going to crash? As long as interest rates stay super low like they are, this indicator is probably going to stay pretty high. With interest rates so low, borrowing money is cheap right now. And that's going to boost earnings and have a positive impact on all these stocks that are traded in the market. With consumer sentiment up, employment bouncing back, a big stimulus package coming, I think we could easily see the market continue on this path for another year or longer. That doesn't mean that's what's going to happen. You never know what's going to happen. But I would recommend, if you are invested in the overall market, to keep feeding it so you keep averaging out, or take some profits. You don't always have to sell everything you own. Since I personally don't invest too much of my portfolio into the overall market, my dividend stocks have done very well for me, and I'm going to continue to put my money there. Just remember, if we get a big pullback, that equals a big sale. As I've said before, the overall market has bounced up almost 80% since the last big drop in February and March of 2020. These big pullbacks are where fortunes are made. So the takeaway on all of this is not to alarm anyone, but just be aware of the overall value of the market, overpriced. There's a lot of wonky stuff going on right now in the market that I've never seen. You've got companies that are not doing well and the stock price is going parabolic, and then other companies with fantastic fundamentals, and if their earnings report doesn't absolutely hit it out of the park, their stock price goes down. Let me know in the comments what you think that the market is going to do and what your plan is for it. Anyway guys, thanks for giving this a big fat thumbs up, and thank you so much for watching. I'll catch you next time.